Yo, what's up, everybody? That was a hard transition, but that's the best I could do because I was doing it from my iPhone. Damn, you didn't even know that shit, huh? All right, well, welcome back, everyone. Hello, thanks for tuning in to another episode of Bullish, right? So this is our Sunday. So what does that mean? That means this is our top five ish bullish stocks to watch this week. Let's just jump into it. There's a lot of shit to go over. But first, oh my gosh, that is not mostly ice today. It's mostly water, to be fair. But anyways, jumping into real quick, crazy end of the week last week, as we talked about on Thursday when we talked about the midweek, the end of week recap. A huge tech sell off. On Thursday, and then you saw that slight lift on Friday. Still don't know what's going on with that, kind of what led to it, but still just something to definitely think about. Lending itself to a short and crazy upcoming week. What I mean by that, the markets are actually closed on Monday, tomorrow for Labor Day. So people might try to get 5 days worth of trading in 4 days. What does that mean? That means swings, that means volatility, and that can be a good thing or it can be a bad thing. There's tons of opportunities though when you find the right wave at the right price at the right time. But with that being said, let's just jump into that top five plays, man. Give me that or I stole that from Gary Streisky off of Snapchat, S Sports Center on Snap. Don't tell him. Shh. I mean, but he says it differently. But I put a little flavor in there for me. All right, jumping into it, making the list again is Tesla for me. The reason I like Tesla, and hopefully you can see my screen, because if not, I'm gonna have to redo this shit, and that shit ain't gonna happen. But so Tesla had a huge run up last week, about 20% from where it started in the week. At its best, it definitely fell. We're looking at Tesla right now on the screen. It definitely fell from where it came from, but 20% runner, really good. You saw that kind of Thursday downpour, that Thursday kind of sell off. But what I like about Tesla looking into this week also as a, calling it again, there's a really nice gap. It fell, more than 20% probably now. But you had that nice gap. You had that nice gap up. And what do I mean by a nice gap up? If you look at the day over day charts, what I was looking at, you have all of that room to play now from where it went up to its high, all the way down to its low. And who doesn't like a nice gap, right? So you definitely have that. There was some continued sell off as you look on Thursday and that, or on Friday, and what you saw here, that really hard red candle. There was talks that they would be included in the S&P 500. That actually came out, and that wasn't the case. They kind of got missed or skipped or whatever the case may be. Not to say they won't be in there eventually, but that news came out even though Tesla started trading a little bit higher from its lows of 372. That news came out and kind of shitted. Okay, it happens, but still, that's where you see that runoff there. But also, there's some tailwinds. There's definitely some strong tailwinds coming, and I'll go into three of them right now, or maybe even four of them. Also, just kind of start on the tailwinds I see for Tesla and why I want to watch them this week. Elon just got back from Germany. There was good memes and videos coming off of him like dressed up in some kind of German attire, but he got some good commitments and they said they went really well. So like there's going to be no obstacles for them building factories in Germany coming up. Also, there's something called Battery Week on September 22nd. So toward the end of the month, no one knows what it is. That's kind of vague news, but also vague can be really good to kind of build that anticipation. So that was a really good one as well. Also, what I saw on Thursday and what I was calling out to a friend was this golden cross on the 5 minute. And what I mean by golden cross is if you see this golden line here, that's the EMA 50. And basically it crossed over this green line, which is the EMA 200. So what does that mean? It means that it turned more bullish at that point because the 200, the 50, so like the quicker average went over that 200. So the short term sentiment is kind of switching to be a little bit more bullish. You definitely see at that cross, exactly like when it happened. I was watching it as it was trailing. It was wanted to do it. I was watching it, wanted to do it. Came off of that bounce, crossed over to be that golden pattern on the 5 minutes, and definitely you saw You definitely saw price action move up over this break here of, what is that? Let's call it, 419, kind of pop that. It would have kept going. You see a really hard double top here. So that's definitely something to watch for. Unfortunately, you ran out of time in the day, and then you had that really bad S&P news, so you saw a sell off here. So, definitely something to watch in the next week, though. But also, what I like it is looking at this in the day over day chart. So, like multiple days, a few things here that I like. One of them, definitely a downtrend, right? You see that downtrend coming, but what you see here, on was at 9-4, so Friday, of course, you see a hammer or a power line. So the Japanese call it a power line or a hammer, and basically, why I bring in Japanese, basically candlestick charting. So like you see, this is a candlestick. That's what we call it versus a bar chart. It actually started in Japan in like the 1700s, right after kind of like that dynastic period where they kind of went fighting. They started the guy specifically started it to measure like rice prices over a certain amount of time. So like candlestick charting, as we're looking at here, actually started in Japan. That's why I just mentioned that briefly, and I kind of learned that. I'm just saying, I'm plugging this book. Japanese candlestick charting techniques, super interesting, really cool. I really like it because it goes into kind of specifics on what to look at for these charts. So I definitely think that's worth the pick up. But basically, what you see here is a hammer here, right? After a doji, which is like an undecided chart. And what I like about that is it's actually two or three bullish patterns in one. A doji is kind of like an undecided thing. There's no real body. The body means like this thing here. There's nothing there. It's more of like a spinning top. So people are like undecided about what to do. The next day, you have an engulfing pattern. So basically, the body of the next day candle engulfs the smaller body of the previous day, and it just so happens that that engulfing pattern is also a hammer or a power line, pattern, which is also bearish. You see this volume over averages is bearish. You see RSI going up. So Tesla to me is a really good one to watch. And the reason why I love hammers or power line patterns is because if you start playing it, you can play the bottom of the candle. So that like this is the wick, right? And this is the bottom of the candle. This is the real body in the top. You can play it as like the support. So say, hey, I have support at this price. If it goes below that price, I don't know what the fuck is gonna happen, but you could at least like plan your trade that way. So that's what I'm looking at Tesla. Like I said, there was a huge kind of sell off on Thursday, but still, I think something to look into. The other one I'm going to look at is one also I'm recycling from last week because I love it, and that was Apple. And same kind of difference, a little bit different. The body's a little bit smaller, so this is more of a spinning top versus a hammer, especially because for hammers or power lines, you definitely want the body to be closer to the top, so it's showing that like sellers tried to bring it down, buyers came and bought it at the high and took it to the high. This isn't exactly there, but it's not too far off. Also, it's more of a doji or a spinning top, seeing that people are undecided about it. But what I like about this, especially for Apple, is this trading over average. So Apple is a little bit. It was kind of like the same story, super high volume throughout the week as we looked at. What I like about it what I like about it though is, well, I don't like the sell off, but I like the gap that it creates. Like I said, who doesn't love a good gap? All the way from 138 right now, well, at the lowest 110. Right now we're sitting at 120. The $18 gap that you can kind of play there. Play it how you want to. Like I said, this is not. I'm just amateur. I'm just throwing out kind of what I'm watching, but I also want to show why I'm watching this. If you don't agree, definitely comment or tell me, hey, you suck. But definitely, this is why I'm doing it, right? Nice gap up right here. I'm just a fanboy of Apple. I have Apple everything. I have a no, I'm just kidding. I have no tattoo Apple. But basically, I love like some companies like Apple, like Nike. Those are just ones that I love and watch, and that I'm always gonna have a small position of, just for the clout, just to say I got it, but also to be able to watch it going forward and have a vested interest. And then when I want to walk into the Apple store, be like, hey man, I'm a shareholder. I have one share. You better fucking, just kidding. Nah, I'm just fucking with you. But also something about there. So we looked at a couple things, but like how I mentioned that golden cross, where this golden line crosses over the green line, so the short-term sentiment is increasing. The short-term bullish sentiment is increasing over the bear sentiment. If we had more time, and that's what I was kind of watching at the end of the day, if we had more time in the day, you would have seen that fucking golden cross as well. And as we saw with that previous chart for Tesla, once you have that golden cross, it really shifts to bullish sentiment from bearish, and you see really nice gaps here. These are all like all of it, like all this fancy shit we look at, whatever. These are all self fulfilling prophecies, though. Meaning, like, they They happen because people watch them and trade them the same way. So just look, you don't have to try to outsmart anybody. You just have to follow the trend, know what to look for, and then go that way. So Apple's another definitely one I definitely want to watch this week because they had that super high, 10% growth or 10% price action movement up, and then you had the unfortunate sell off as we said on Thursday. But volatility, and yeah, it's trading actually lower than it even opened at on the Monday, but for a while too. But the volatility can be your friend if you know how to trade it correctly. All right. The other one I want to walk through is Peloton, and the reason why I like Peloton is because I like getting off my ass. Now I'm just kidding. I can't even afford a Peloton, but like I can respect it for the company it is. So Peloton, they have earnings this week, especially, and the next one we're going to look at also has earnings on the same day. So Peloton has earnings on 9/10, and as we saw with like earnings for Nike and Walmart, you can play it a couple different ways. I like to play conservative. If I missed the boat and it shoots off, well then I missed it. I didn't get in on it, but I like to watch it after earnings to see. Hopefully it goes down into a price that I feel comfortable with, and then I catch it on the reversal for if it has good earnings for the play up, right? The thing I like about Peloton though, there's a lot of tailwinds for Peloton. So they got earnings, they got that name association, earnings on 910, they got that whole name thing going on. There's a recent JP Morgan evaluation increase from $58 all the way up to 105. So basically, there's some people or there's some companies where like they say, oh, we're going to increase the price estimate to this much, but sometimes I take it with a grain of salt. But when it definitely comes from JP Morgan or something, one of the big banks, definitely look into that a little bit more, and they definitely increase their price target from 58 to 105. So that's something to look out for. Also, there's over. So if you don't know what Peloton is, look it up. Basically, it's a stationary bike and their treadmill. So it's a device. But what they also have moved into is subscriptions. So even people that don't have a Peloton device subscribe into the Peloton app and workouts and stuff. And they actually have over a million fitness subscribers. So they're not just a device, a hardware, an equipment. They're also a subscription service, which Wall Street loves. I love in terms of that reoccurring revenue that's coming through, making them not just offering like that whole Apple approach, an ecosystem of offerings versus just like one thing, one purchase, and that's it. So I love that about it. But also, it's definitely a COVID play, meaning like gyms are closed. People don't want to go outside. People are going to look at what kind of offerings they can get. They're going to get that new hotness. They're going to get the Pelotons or the mirrors or whatever. So it's a COVID play in my eyes as well. Also, over the next couple weeks, they have three, to me, big changes coming out. They have a less expensive, so they already have a treadmill. They have a treadmill and a bike, but they have a less expensive treadmill coming out. They have a more expensive bike line being introduced, and also the current bike line is going to be reduced in price, so making that price point better for maybe me to look in and say, oh, let me get one of them Pelotons and shit. But anyways, that's another one to look at. I like is Peloton earnings, a bunch of tailwinds. As you can see, also as we saw before, a kind of like a spinning top. And this is why I like volatility and sell-offs and shit. Because if you time this right, on this candle here, you have your low, you have your high, and you hopefully get into it at a really good price. But there's all that gap that you can make up there as well. So I really like Peloton. It's a little bit, it's on the more expensive side for IPO, because these guys they just IPO, so they just formalized as a company. I don't want to say within the last year. It hadn't been that long. Yeah, it only goes back to what the hell is that 923. So yeah, less than a year they've been actually IPO, but definitely something I've been watching. A lot of tailwinds coming up, strong COVID play, really good. And I was just kind of looking at this before the show just to kind of hey that double bottom off of 72.11, definitely interesting, because they're also going to have that. Well, they did. Yeah, they also have that golden cross here, and you see that price kind of shooting up as well. So golden crosses are powerful. It's like I said, self fulfilling prophecies. People are watching these trends, these kind of things, and they trade it appropriately. Now, for me, right now, as we look at this price, I'm looking at this RSI. It's pretty maxed out at 85, but this bitch can run. Sorry, this thing can run really hot at 85. Some companies, as you saw, I think it was Honeywell last week. Sometimes they run 70 and they kind of top out on the RSI. RSI, like we said, is oversold or overbought. Anything 30 and below is more oversold. Anything 70 or above is overbought. And those are correction territory things. Like it might correct sometime soon. But this one, it can run 85. Well, shit, 80, yeah, 85 without needing to get corrected. So it runs hot. It's a hot runner. And that's exactly kind of what you see here, especially with that kind of spike here. What I am seeing though, which I'm gonna definitely look into, is this double top here at 84 ish, right? So that's basically showing really, really strong selling pressure when it hits that mark. So it's very important to look at. So I would actually play this. If I do play this, I'm gonna look at it two different ways. I'm gonna look at for the reverse off of that bounce off of that resistance line to hopefully come closer to this $72 support line. Because like I said, don't buy the middle. Don't be the suckers that buy in the middle. Buy at the low or buy at the top. That to the low is going to be buying it closest to that 72 mark, or where I see it's going to reverse off of. The high is going to be the break over that 84 dollars, so about 85 bucks. When I see it hits that and closes, so a candle breaks that line, closes over it, it's going to now use that as support to go up to this gap up here of 92 bucks. I'm going to play one or those two ways. I'm definitely not going to buy it now because I don't know what the fuck it's going to do. Honestly, if it does one or the other, I still don't know what it's going to do. I mean, I'm going to hedge my bets and say if it bounces or if it breaks. Definitely don't want to buy in the middle because I don't know what the fuck is going to happen. But still, really strong play. You can and also you see these there's definitely bullish patterns here. I don't like, so I do see also that RSI is a little bit cooling off, so it's coming down. MACD looks like it wants to. So as we talked about last week, MACD is definitely a sentiment to say, hey, like looking more a little bit like to me into the future and saying, hey, how is it going to converge or diverge? It looks like it wants to converge to be more of a bullish, bearish play, but we'll take a look at that and keep a look at it. But definitely Peloton's one to look at because you got a bunch of eyes here. It's supposed to be a good earnings, but also with earnings, is it good enough? I don't know, but that's up to the market. That's why I like to play it the more conservative way. But we do have some time to see how it's going to work. There's a lot of time between Tuesday and Thursday, and you can, if you get earnings early enough, you can play it both ways. Honestly, you can make money both ways. Is how I see it. Definitely don't want to get into the day before or 2 days before, but maybe 3 days before is that really good window. Oh, that was Amgen from last week. All right, stepping into Chewy. Chewy is another one. A recent IPO. I think they IPO'd in March. They have earnings similar to Peloton on 9/10. And the reason why I like Chewy is because if you know me, I'm a huge dog lover. Fuck cats. No, cats are cool too. I'm a huge pet lover, dog lover. And Chewy has that subscription service. As I said, like I like about Peloton, that subscription reoccurring revenue. Chewy is the exact same way. It's a reoccurring revenue, like a private label. You can buy anything from Chewy related to pets and have that coming every month. Every month. So they have that recent IPO, so it's fairly new in the game. So definitely something to think about as well there. But yeah, it's just something to think about there. But so tailwinds, they have the whole animal sector. They're a COVID play, meaning like people doesn't want to go out as much. People want to stay in and get shit delivered to them. That's exactly what Chewy's about. If they have positive earnings similar to High Peloton, are they positive enough though? So this is definitely one I'm going to watch for a rebound. And because we saw that sell off on Thursday, Friday, you definitely see that still here, trending down. I wouldn't call that a hammer powerline doji because it's really far off of the top. Something to think about there, but still like super strong support here for multi days at 756 ish. Right now it's at 61.18. So I think there's a lot of gap up to 74. So still a lot of room to play before it even starts trading at the high, especially if it has good earnings. They're expected to have good earnings, so that's always good. So yeah, but the thing also I like about Chewy is tailwind. Speaking about tailwinds, is they're in a really hot sector right now, and over the past few months, it's like consumer cyclical. So like I said, like that reoccurring consumer coming back. So like think of it like as more of like the Amazons and the WalMarts and shit, things that people have to keep on buying cyclically. Over and over again, right? So Chewy is definitely that because we love our pets. Pets are fucking recession proof. Pets and alcohol, recession proof. Any problems we have, we gonna keep our pets. We're gonna keep them fed really well. And Chewy specifically, if you're buying in Chewy, if you're using Chewy as a consumer, you really love your pets. You're gonna keep that reoccurring. So that's another one to look out for because of those things. The last ish one I want to talk about is Teradyne. And I actually didn't know what the fuck they were before today. But the reason I'm looking at Teradyne it was a hard one for this last one to look at, like why I wanted to see it. The reason I wanted to look at Teradyne is because so on starting on Tuesday, similar as we saw last week, there's three companies moving into the S&P. Unfortunately, Tesla isn't one of them. That would have been fucking astonishing. It would have been great. It would have been lit, or whatever the kids are saying these days. Unfortunately, Tesla didn't make it. The three companies, two of them I'll mention in the catalyst corner in a couple minutes. But Teradyne, TER, is my favorite one looking at them. And the reason for that is their fundamentals. So as we saw like last week, they're going to be eyes here. We don't know if it's going to be the first day on Tuesday or if it's going to be on Friday, but over the next couple weeks, I really feel that they're going to have a lot of eyes on them. And the reason for that is they're moving to the S&P. And of those three companies, when I look at their fundamentals, to be fair, I'm more of a technical trader, like meaning like I like to look at these charts and shit. I like to look at patterns. I like to look at all this crazy. Oh shit, that's a really good one right there. I like to look at all these patterns and stuff. So that's more of a technical analysis, man. See, this is a really strong resistance here at that same line because it's a multi touch point 120 123. So earlier in January, the end of January, this is going to be really strong to break. Once it breaks that, I think it's going to have a really good pop. So it's going to go one way or the other. Interesting. But anyway, sorry, I just saw that right now. But Teradyne on the fundamental side of the three companies that are moving to the S&P 500 are the strongest. And the reason I say that is because they're in a hot sector, right? They design, develop, manufacture, and sell testing equipment for electronics to many different other industries. The two that I'm excited about are aerospace and the Department of Defense, right? So there's so much upside there. They basically test electronics, your connectors for those companies. So that's always good to have that backing, right? To have that specific, but also like super broad like niches, right? It's specific but broad at the same time, and I love that. But also financially sound, meaning their debt to equity ratio, so how much money they borrow versus how much like they get, is under one. So basically, you want for me, my risk tolerance when I look at fundamentals is like if they have more, if they're using a lot of debt, they're getting loans, they're getting loans, they're getting loans. I don't like that already off the jump. They're you can use that money to expand or whatever the case may be. I just don't like the companies that I invest in, and this is how I look at Teradyne is as more of an investment, a medium to long term play versus a short term play, as an investment, right? Because I think it's a very sound company, but also their price to earning ratio. Speaking about fundamentals, still their price to earning ratio for their competitors is right in the middle of the pack, meaning you don't have to pay all that much more for a share versus other of their competitors in that same industry, right? But also their EPS, so their earnings per share, is like their expected growth for the next few years for their EPS. So how much earnings you're going to get per share is like 25 or something like that. So really good, really basically it's relatively cheap for the industry, like right in the middle. You're not gonna have to pay a premium for this, but also their growth is pretty substantial, over the next few years. I think when I looked at it, it was like the next 5 years. So really good there. So I like Teradyne, and if you look at the technical aspect of it, as we just saw right now, hey, this definitely looking at it here, this line is going to be really hard to beat. This resistance of 81.81, and that's fine. There's nothing wrong with that. But so I would play this, like I said, two different ways, similar to how we looked at two trades ago. Is if it breaks that line, or if it goes under to the support line, I'm gonna play it two. I'm gonna play either one or two ways, whatever the market is showing me it needs, right? So it's gonna be a really fun one to watch. Also, you're gonna have that golden cross possibly here in the near future, which is you're gonna see that share price, you're gonna see. I don't think I ever saw the golden cross that didn't increase share price. It might happen, but like I said, the other thing I'm looking at though, and the reason why I think this is gonna be more of a thing to watch right now versus play right now, is you see this RSI dropping to the 30, as we talked about, is oversold area. So people are getting out of it right now. But also that MACD is very, very bearish. That convergence is diverting, right? So we want to see it next converge and then that bullish pattern take off. It just hasn't been there. You see like two constant days of sell off, and you just haven't really seen it come back. So definitely one to watch, maybe not to trade. I'm hoping that it breaks. I'm hoping that it goes as low as it can. I'm sorry, that's just what I'm gonna say it. I hope it goes as low as I can, so I can get the best price that I can get for this bad boy. This is a really good one right here, $70. So hopefully it breaks that 75, and the next thing we're gonna see is at $70. And I'm gonna just watch it. I'm gonna just watch it and play with it. Like I said, I like this one for the mid to long term. But hey, that's the way I'm gonna play it. All right, so that's my five stocks I'm watching this week. Catalyst Corner, I like to have a little Catalyst Corner just to kind of talk about some other stuff that's going down, going on. So there's two Catalyst Corner mentions for me right now, and I just deleted something by accident. But basically, Catalyst Corner, there's two ones that I'm gonna talk about specifically right now. And I don't know if you know who Warren Buffett is, but he's a pretty fucking big deal. And over the last, not too long ago, he actually celebrated his 90th birthday. Big ups! I know Warren Buffett's watching me right now, so hey, congratulations on 90, my guy. But he also celebrated his 90th birthday, and what he do at that time, he heavily invested in five Japanese companies, over $6 billion of investment going to five Japanese companies. And it's really hard to trade in other indexes sometimes, like other countries. But if you wanted to get a part of that, like that whole like Japanese like market, there's definitely what they call ETFs, exchange traded funds. There's two of them that I saw. One of them was DXJ, and the other one is EWJ. And basically, if you don't know what ETF is, it's basically like a collection. You can think about it as a collection of stocks. You invest in this one ETF, and that ETF is invested into, possibly 10, 15 other stocks in that one ETF. So for the ones I mentioned, DXJ and EWJ, they have, like the big ones in Japan. So Toyota, some have I think it's actually EWJ that has, Sony and you know damn, I'm already spacing on the name. Anyways, the other gaming platform. What's the little thing that you play video games on? Can you tell me? Oh, you can't tell me. Anyways, Nintendo. Sorry, thanks for telling me. But basically, you can trade these ETFs to kind of follow that money because hey, Warren Buffett, he doesn't just invest to invest. He invests in what he knows in, right? So you know, there's a lot of also news coming out of Japan. So recently, Prime Minister Shinzo Abe just departed due to health reasons. I think it was in the past week. So hey, what does that mean? Value and volatility, which I love. Those are actually two of the three V's that I love. So there you go, right there. The Oracle of Omaha, which is Warren Buffett, doesn't just do things for fun, right? He invests in what he knows. So what does he know about Japan? I don't know. Maybe, like I said, we got two of those three V's in there. Also, in this catalyst quarter, what I want to talk about is the S&P movers. We already talked about one of them, and the reason I picked Teradyne was their fundamentals and more of a long-term play. But also moving on Tuesday is Etsy, and I'm sure you motherfuckers know what Etsy is. So they already. The reason I didn't pick them is as something to watch for me specifically is even though they have that S&P move, they already moved 6% after hours. And what I mean by after hours, so after trading hours, Etsy moved really heavy, right? And you kind of see that it's actually not too bad looking at it that way. But they already really moved super, super heavy trading at that line. So if you really wanted to get an Etsy, hey, just know that it's already making moves up. But to be fair, we just had that really big sell off on Thursday, Friday. If we didn't have that, it'd probably be really overvalued. But this really nice double bottom here at 103.11 is not too bad to look at now that I look at it again. 122, you would have to say, hey, like this support line or this resistance line up here. So it's it's getting away from us right now. That's why I'm more just watching it to see what it's gonna do. But it does have this value up of 140. 141. So you can play it however you want to play it. Right now, it's at 112, trading at the highest to the all-time high is 141. So there's still a lot of room to go there. But Etsy's going to have a lot of eyes on it. The only reason, like I said, the fundamentals for me, they have their debt to equity ratios. We saw with Teradyne was like one. This one's like 3.5 or some shit. So they're leveraging heavy on debt, but also they're very expensive. Compared to was it like 20 or something for the EPS for Teradyne? This one was like, I don't know, it was like 60 or some shit. So you definitely are paying a premium to get Etsy, but maybe you don't care about it for the long run. You just want it for that quick 5% pop, which I said, hey, every 5% pop, you got to think about scaling out or selling, right? The other one that's going to be on the S&P is, I didn't even know what the this one was, but it was Catalent. Catalent. I think I pulled it up already. And basically, I don't exactly know what they do. I don't even know if I have it up here, to be honest with you. But yeah, I didn't even look at that one because I was like, I don't know what the fuck they do. I don't look at it. But there's three of them moving. There's one we talked about, Teradyne. There's Etsy, and there's Catalent. And I already covered the why you want to look at them in the last show because they're moving indexes or they're moving to an index, right? People are taking notice, volume and volatility, right? And value, right? Hopefully, hopefully, hopefully. All right. So parting takeaways, like, hey, look for your opportunities. If you've been watching my top plays, man, if you've been watching them, you definitely know I like that value and volatility. Um, but have a plan. Like I said, have a plan. Enter, exit, risk, reward, stop loss. That all should be in your plan. Write it down, but also stick to it. I definitely should be saying that to myself. Sometimes I get that FOMO or fear of missing out, and I have to check myself and say, hey, like, chill on that shit. Have a plan, and that includes what you enter at, your price, what you exit at, why you're going to exit, your risk reward ratio. You definitely want to have it above 2. So what you're going to get versus what you're going to lose possibly, right? Your stop loss, write it all down and stick to it, right? Patience is a virtue, and if you're a trader, patience is your best friend. As mentioned, we saw a tech sell off at the end of the week. Is it for tech specifically? Is it profit taking? Is it a temporary correction, a bubble bursting, a tech bubble bursting, or a sign of shifting investor interest into a new industry? We don't know that honestly right now, or I don't know that. If you know that, let me know, comments or just like DM me or some shit. Hey, I know what it is. We will see. We're working on that. So maybe I'm working on different ways to like look at different methodologies to look at different industries and kind of gauge where people are moving. For the last few months, it was tech, but that might not be the same this next week. The following week, we might be seeing a shift there. I don't know. I'm just saying, like, hey, something to think about. So I really appreciate you joining me. Definitely, if you want to hook up on social, Gmail bullish_solo at gmail.com. Just shoot me an email and say, hey, I fucking hate you. Or hey, you're not too bad. YouTube, hopefully you're watching this on YouTube, bullish. Definitely subscribe. I really appreciate the support there. Subscribe, and then when I upload stuff, you'll get it like real time. Twitter, Reddit, and stock Twitch, real_bullish. All three of those, Reddit, Twitter, and stock twits. If you're on stock twits, definitely give me there on real_bullish or Twitch where I record. This is bullish one. Like I said, I record there because I don't know how the fuck to do it on YouTube, and I don't feel like learning it yet. But anyways, I really appreciate it, the support and shit. This definitely helps me every week kind of decide what I'm gonna do. I hope it helps you also kind of like just think about it a little bit differently, or like say, hey, yeah, I really like this, or hey, I fucking hate this, or suck. But yeah, I appreciate the support, and you guys have a good week, good long weekend. Like I said, on Monday we're not trading for no one's do. Hopefully you're not working on Monday. If you are, I appreciate it, but also the market won't be open. So it's going to be 5 days worth of trading in 4 days. So we'll see what that gets us. All right. Well, I appreciate y'all. Peace.